So I had been talking about food stocks for quite some times. Welcome back, everybody. Had a long weekend at the hospital. Didn't get a chance to do a video on Friday. Had a lot going on Friday. Unfortunately, didn't have the opportunity to put out the video on Friday. I was going to do it on Sunday, and then I forgot a buddy of mine was getting married. I got like 3-4 hours maybe of sleep after I finished my night shift at the hospital. Went straight over to the church and then came back real quick, took a nap, and then headed over to the hospital. But I didn't want to not do the video for the week. And so I had been talking quite a bit about food stocks, right? So food stocks and food prices, obviously, as a result of the inflation, food prices are going to go higher, right? So in Business Insider, this is a Business Insider in India, says restaurants are hiking prices because of labor shortages, higher wages and rising costs of staple foods. Says one owner said he's paying 50% more for ribs than normal and double for cooking oil. And this is basically going to be happening. This is basically going to be happening around the world, right? It says Georgia's North Side restaurant owner Alan Natkeel says restaurants have raised prices on menus on items because of increased costs. Obviously, here in America, because people are getting paid more not to work, and so as a result, we're going to see inflation. The inflation that people should be worried about is when, of course, salaries have to move higher because basically people don't want to work, and as a result, prices will move higher. Which is why I said, for the most part, I've been investing in companies, for example, like Tyson Food, and for the chicken shortage, Heinz ketchup has quite a bit of a gap to fill if we're going to move above. If we're going to move above, Heinz obviously slowly inching its way up, as you can see, creating another little area of channeling, and then we could see a little bit of a breakout. Phase three, most of these stocks that I have purchased are primarily in my dividend account, right? Back here, this is basically where I was for today, up 613 on the day, and then of course overall this portfolio is up over 25,000, with 2,200 of that being in the form of dividends. And this is a dividend portfolio. Just about every stock, for the most part, pays at least around 2% dividend or more. And so we'll take a look at some of these. For example, like as you can see, Heinz at this current price pays 3.6%. Tyson, I believe, 2.2, 2.25 at this percent. FLO, which I have been in for quite some time, at this price paying 3.4%. And as you can see, FLO basically making some really good moves. It had been stuck basically down here at about $22, and we're up about 15-16%. As well as Kroger is another company that had said that they were going to be raising food prices, and so currently at this price point, paying 1.86. And so in inflationary environments, typically what you're going to want to look for, or what I'm looking for, are, for example, people need to eat. And of course, as prices get higher, these businesses, to in essence maintain happy shareholders, have to raise prices. Otherwise, people are just going to sell their stock. The other thing that I had talked about last time was companies, for example, like Rio. As base materials, right, become more expensive in an inflationary environment, typically you'd look for companies that produce minerals, like, for example, Rio. Rio was another company that I talked about back down here when it was in the low 70s. It shot all the way up to as high as 95, almost. I think we breached $96, as you can see. Breached 96, and we experienced a little bit of a pullback, a little bit of a shakeout right here, and we're now channeling up here between what looks like 86 and 92. So it's meandering here. We could see it move to the upside, currently paying a 5.17% dividend. The one mineral company that I'm actually holding for growth, and this is because of with changes in the way, for example, I believe China released a video talking about how they're utilizing different forms of energy, and so different minerals that are sold by many of these mineral companies. And CCJ, even though it pays a tiny bit of a dividend, what we're really holding, and I bought it here down in the bounce, I was waiting for it to come down. I was able to scoop some up both in my Robinhood and as well as my Webull account, and I'm basically adding to this company every single week. So I have certain companies that I'm just basically have it automatically set. Either I'm adding it to it every week, or every 2 weeks, or every month, etc., depending upon the volatility. If there's a lot of volatility within the stock, then I typically want to add to it every day. If it's moving really, really incrementally slow, then I add to it every week. If it's like stair stepping up, then I might add to it every 2 weeks, because there's no reason for me to enter into it that frequently. But if a stock is like this, and if I get into it every week, I might get into the same price point at the highs. And so to minimize that, I do daily purchases in those type of stocks. But as you can see, just looking at the channel, we're entering into a new channel in CCJ, right? So it had been holding $18, and as you can see, all the way back from 2011, that the stock was trading in this channel, couldn't break above $24. But if you remember during right, during the breakdown of 2008 and 9, the company can't, because of inflation and money printing, the stock moved all the way up to as high as $44, and then of course eventually came back down, because these companies are typically subject to basically inflation, and as inflation eventually tapers down, because the entire global system is deflationary, right? The entire global system is deflationary. Why do we say that? Because some people get richer than others. Some people's storage of wealth grows more than others. And so what do? They either buy stocks, they put it in places where they can get yield. And so instead of that dollar being passed from person to person to person to person by starting new businesses, maybe they take a lot of that money and they invest it. For example, look at wealthy Bill Gates, or what's his name? God, forgot his name. Anyway, but most of these wealthy individuals, they typically look for places where to store their wealth so that they can gain yield on it, and not necessarily through new business creation, where that money would then pay employees, and those employees would pay those employees would buy food, pay rent, etc. Right? So a lot of that money maybe gets invested, for example, into the stock market, into the bond market, into now cryptocurrencies, into things, what do they call those, NFTs, right? So we're seeing, or maybe, for example, what I started investing in wine. And so all this basically sucks liquidity out of the market, because that liquidity is not being, in essence, passed around, right? As GDP, like I spend money, I buy a computer screen, I spend money, going food shopping, I spend money paying rent, I buy a microphone, right? So this acts to increase GDP. Now, that by comparison to my actual wealth, right? By comparison to the amount of money that I earn every single month, overwhelmingly, in terms of my finances, a very small amount of what I earn actually goes into my daily spending or my monthly spending but overwhelmingly, most of my money ends up in wealth creation. And as a result of that, that is deflationary, because instead of that money going into society, it gets stuck in the banking system, or it gets stuck in the stock market, or it gets stuck in the housing market, etc. Right? So all this ends up being deflationary, because that money isn't being invested into, for example, I go start a business. I take that money, I go start a business. Now I have to hire employees. As that business expands, I have to hire more employees, etc. Deflationary is, for example, like a cell phone, right? You used to buy the newspaper, you used to pay for cable TV, and you had a cell phone. Now you have all that in one. So all those all those other expenses now disappear, and so you end up spending less for all those services here. That, in essence, deflates the amount of available currency, because then I end up keeping most of my currency. And that's why many of these individuals who own their wealth, they typically go out there and they invest it in different forms, which is kind of why you see crypto gaining a lot of crypto being a little bit more popular. You're seeing NFTs, and it's because they're looking for avenues to create deflation. If all that money was injected into society, then you would just see Venezuela type inflation, right? So when people complain that all these big businesses and they got money from the government, the reality is that the government gave everybody all of that money and injected all of that money into the society, it would cause rampant inflation, and it would just collapse the entire economy. So like I said, so with inflation on the rise, right, because prices are going to go higher, because less people are working, the government here is paying people to stay at home, and so the narrative is that inflation is on the rise. So we have to invest accordingly to the narrative, regardless of whether we can see through the schemes. it doesn't mean that there is not money to be made there. Just like Bitcoin. Bitcoin, they're like, Bitcoin is a storage of wealth. And then Bitcoin drops, it drops 50 some odd percent. Where's the storage, right? Where's the storage of wealth, right? So even though we know the narrative, it doesn't mean that money cannot be made in such investments. And so it's why I've been investing more heavily into, I believe they do a lot of uranium, which is useful for um, nuclear power, which is what you hear China and America getting more heavily involved in. Everything is, as they say, going green, which is why you see like Neo, ChargePoint, Teslas, etc., being a little bit more favorable. But this is basically where I have been putting most of my money in, at least lately. In terms of my last couple of buys, my next couple of buys, this is basically what I've been buying. Redfin, I believe housing will go up. NCLH, right, Norwegian Cruise, which is going to be my basically reopening play. Microsoft, because Microsoft, and I primarily wanted to get back into this for the services as they're getting involved in gaming, and I wanted to be a little bit more diversified in my portfolio, and then obviously CCJ. Now, what I hold basically in my risk, you can see the rest of them here is, of course, we're still holding on to Wells Fargo, right? Wells Fargo, basically waiting for a breach above 50. It's basically stuck in this channel right here, right? We've basically been stuck in this channel over here. And so we're waiting for a 50 breach. Very similarly, for example, with ExxonMobil, again, another commodity, right? So we're waiting for a breach above 62, but the other area that you're going to look out for is right here at 65. Now, oil is trading higher. For a while, we have been waiting for the breach here on crude above 65, and you can see the futures here trading above, well above 70. And looking way back, right? I'm gonna look here, just peel back the chart. As you can see, very far back, where 65 was a good inflection point, where if we breached above on any sort of volume for a prolonged period of time, oil will hit above $100 a barrel. And so as we can see, we're starting to inch above, especially during the summer months, as Americans are going to be out there traveling more, etc. And because of supply chain constraints, there's been numerous refinery fires that have gone on in different parts of the world, in Indonesia, in India. There was another one recently in Tehran, in Iran, right? And so this will cause the price of oil as the restraint, right? They're going to implement supply chain constraints, which is going to cause the price of oil to rise. Here in America, and the price of gasoline is going to go up, which also means that food prices will rise, because the trucks that are responsible for taking these food sources to and fro are going to have to charge more because of higher wages, higher food costs, higher gas costs, etc. And so why it's important, when you realize the narrative, to invest accordingly, which is why I've been heavily into food stocks, and as well as like Rio, CCJ, primarily for minerals. Real estate, a big part of my portfolio is as well in real estate in my dividend section, between buying more shares of AT&T I do like for both the steady dividend as well as the possibility of growth once the company actually splits. Obviously ExxonMobil, and of course I had been talking a little bit about VIR, which is also having its hand in the COVID cookie jar. They're doing medications to reduce the longevity of the person in the hospital, to reduce deaths, etc. As well as IBM was another play that paired up with, I believe it was Moderna. I believe it was Moderna that they paired up with Moderna, which is why I started buying IBM down here. We've seen IBM hold 144s, waiting for a breach above. We have quite a bit of room to the upside where we could see IBM trade. IBM, and then holding, of course, GlaxoSmithKline. GlaxoSmithKline was the one who paired up with VIR, which is a biotech company, and we're basically seeing a bounce in GlaxoSmithKline. And so these are the stocks basically I'm holding, and why I am holding many of these positions. And of course, all these stocks do pay dividends. And so we're seeing, maybe moves from other positions, like heavily into tech, heavily into, for example, like Palantir or many of the other SPACs. And so money is leaving from one sector and flooding into other sectors. I was a little early to the party, but now as many of these stocks are starting to rise, I'm going to be reaping the benefits more and more and more. I missed quite a bit of the other tech moves and many of the specs, just because I kind of know that many of these things are very speculative. And the number one rule when it comes to investing is to preserve capital. And so I've taken a more conservative approach, and primarily the purpose of this is to provide cash flow. Overwhelmingly, all these stocks pay me dividends either every month or every quarter. The only stock that's not is biannually, which is Rio. And it's primarily because my goal for this year was to have a minimum of $500 in dividends for monthly recurring dividends. And so we're almost there. We're like 4 and change. Hopefully by the end of this month, I'll push myself over the edge. We'll have to wait and see, as I do have some other investment goals. But as you can see, we're not doing too shabby. Moving forward, as this begins to compound, well, I should be just fine. And of course, most of my recent buys for the past month or so have basically been in Redfin, Norwegian, Microsoft, and CCJ. And you can see I'm holding just a little bit. I've got a little bit more as well in my Robinhood account. As you can see, my portfolio right here, what we're currently up, etc. What I'm up here holding, Wells Fargo, and basically just waiting for many of these stocks to just either change direction. ExxonMobil, again, was one of my other plays. You can see here where we bought, cost of 3,200, up almost 1,900 on that one. And then holding into things like Nusi and Jeppy, which are basically monthly paying dividend stocks. You can gain, Nusi and Jeppy are basically things that I'm holding just straight for cash flow. Not a whole bunch of movement in the charts, but they do pay heavy amounts of cash flow. And so I've got a little bit of money into, as you can see, just about 7,000 or so into these that are very high yield, but then I have quite a bit more money into, for example, food stocks that are typically a little bit more low yielding. So it helps to balance out the portfolio with a little bit of growth between my little bit that I have here in tech, which is in ChargePoint, Neo, Chewy, Roblox, Chegg, and Square. And overwhelmingly, most of what I am investing in terms of tech is typically going to be stuff that is going to have like a service, right? So instead of just like buying a phone from a company, really what I'm looking for are companies that offer services, which is why I like Neo, because they also have battery, Square for obvious reasons, Chegg, it's a service tech, Roblox, service tech. So this is where I really want to be putting my money. I believe more Americans will be single. Chewy will become more popular. It's basically the Amazon for pets, which is why we'll be putting much more money into this portfolio. But I've only got so much because I have a lot of different financial goals that I'm basically working on all at the same time. But overall, this is basically how this portfolio is going. And overwhelmingly, we're going to pause here and we're going to move over to the Webull. Right, so you can see what I'm still holding the same positions, right? Still holding 100 of Palantir, 200 of Kron, moved above $9. The reason I'm holding most of these wheat stocks, as you can see, I'm holding Palantir heavily into wheat stocks, like for example Kron, as well as CGC, and then into Viacom. I've been holding Viacom for some time, and then as well as that's it. That's basically what we're holding. So I've got 200 of Kron, 400 of Canopy Growth, 100 of Palantir, and then 172 of Viacom. And for this, my Webull account, I have just been writing covered calls. So when I see, let's go over here to the chart. So for example, it's easier to see it over here on these charts. So for example, on Kron, I've been selling, as the stock was moving down below the 200, I was selling weekly calls. And this is basically how I make what the stocks that I hold don't pay dividends in this account, but I treat them by making cash flows by selling covered calls. And so Kron is now, when it hit 9, I didn't think it was going to push through 9 on the first attempt, so I sold covered calls. I sold calls at 9 for 30 cents each. That made me $60 for the week for the 200 shares. I did very similarly, for example, with Canopy Growth. Canopy Growth is holding below 26s, and so I sold about $300 worth. It was like $330 from last week. I sold some for like $60, some for like $100. When it came all the way up to here, I sold like 2650 calls, and those all, it was like 115 or 119. and I sold 2 of them. I sold another one for about 64, and I had another one, I forget how much it was, but it was all in all, it was about $300 for that week, just in the covered calls on CCG. Another 60 for Cron. I still have the one for next week. It ends this week, I should say, on the Viacom, and those are 43s. Oh, it's noisy outside. I got the window. So I sold 43 50s on Viacom, and those sold for $71. So this is basically, as I'm seeing pullbacks, I pay attention to the price levels. I see where the resistance is. I wait for it to hit the resistance, pay attention to the pullback, and I sell the call. It is a risk because you could maybe come back the next day or over the next couple of days and see it breach, and you can either choose to get called on your position and have to rebuy it, or if you see a pullback, you can either buy a little bit of the call back, only take a little bit of a profit. But thankfully, I haven't had many issues where haven't had anything really called on me, except for TNK. TNK was the only thing that got called on me, but I had sold it up here, so I wasn't complaining about it. This is basically what I'm doing, as I believe wheat stocks will move higher, which is why I'm in stocks like CRON, Canopy Growth, and MO. MO is hugely invested into Cron. MO owns, I think, like a big percentage of Cron. It was like 10 or 15% of Kronos. And so we're seeing a lot of talks from lawmakers about making the legalization of weed. Whether they do it or not is a completely different story. But just the fact that this is the talk lets you know, okay, I need to be financially paying attention to where politicians are speaking about these things, because the market will react. The market will react to it. And so that's basically where I'm holding. In terms of my Robinhood account, I am holding primarily tech stocks with some dividend plays. Let me just open up I know I'm holding Chewy. I believe I bought some Apple, but a little bit of Apple. I've only got about 5,000 in the account so far. I'll be putting more into it. And I bought a little bit of crypto. I've been buying it down here at the low 30s. I've been buying some Bitcoin and some Ethereum Classic. My phone is so damn slow. And so we're gonna leave it here. So this is basically, I should have just popped it open onto my and I'm getting hit on freaking crypto. So I bought more Square, Chegg, T, Redfin, CCJ, Jeppy, Chewy, some Disney, Apple, BGS, Peloton, Chipotle, not Chipotle, ChargePoint, and MPW, which is basically a hospital REIT, which is good in an inflationary environment. And that's basically where I've put quite a bit of my money. And this portfolio is just going to be like a set it and forget it. I've already put my auto invest already on, so I'm not paying too much attention to it unless I'm going to be profit taking, which I don't see. The only thing I'm really looking to be taking profits in is Wells Fargo. If we see a pullback, right? If we see a pullback below 44s, I will probably take some of it out, and ExxonMobil eventually. I'll make the shares free. So as you can see, this is basically what I've been doing. So you can see where my costs. So I just bring the overall investment current value back to my cost, pull those profits out, and then let these shares pay me dividends for free. I'll do the exact same thing with Wells Fargo, because Wells Fargo eventually, in the business cycle, in the banking cycle, will go back to paying a good dividend once the government releases the regulation, which I think they will do probably maybe sometime this year. But I'm gonna leave it there. This video, a lot longer than I thought. Anyway, I'm gonna leave it there. Thanks for watching. Feel free, of course, to like, comment, and subscribe, and I will check you out next time.